Hey everyone, you're doing okay. Apex the Grey back with an update. We finally got filled. Patience is virtue. Um, this is why it's key. It would have been very easy to have tried to trade for the sake of trading, but we had a plan. We set out and we said, originally what we said is we want to get filled at 20,195. Didn't quite make that. I recanted on that in my last video and felt like because we were reading Bookmap where the liquidity was, a better position was 19,950, 19,950. So that was our execution. We got filled. So short order was here. Looking at it, yeah, I mean, it looks like we're starting to maybe capture a pattern here in terms of a potential line. And yeah, now it's a case of just managing the trade. What I think's particularly done well is it's respecting this 800 day or 800 candle moving average, specifically on the 1 hour. I've drawn out based on where the liquidity is on Bookmap, or at least at the time of recording. Obviously, that's always going to be subject to change. Where the liquidity sell orders are, and where the liquidity buy orders are, or large amounts of buy orders. So, yeah, patience is a virtue. We executed the plan. I'm quite pleased. We wasn't too far off with this one, to be completely honest. We just got stopped out at the 20k range. Where we are right now is let's have a look. So let's just scoot over to Qcoin. Let's see how the flow came about. So I'm just going to go to Qcoin, quick second. So yeah, $18 in profit. Obviously, we don't have a massive account. We took a little loss on the first trade of about $50. What am I looking at? 20%. So I'll be looking to try and get to $100, maybe a bit more if possible. Depends on how we see things. This is where our order was placed. Actually removed my stop loss, and I'll tell you why. Because I was looking at where the zones were on the liquidity, and I thought, well, if I set it at 19,200, 20,200, I may get stopped out. Let me just show you what I mean. Just really quickly, just head over to Bookmap. Give it a quick overview over here. So the way Bookmap works, unfortunately, it's a bit slow on my processor at the moment. Can't really do too much about that. Apologies, but we have the VWAP here, volume weighted average price. And the way the VWAP works, it's like, well, if you've got lots of buy orders or sell orders at relatively low volume, the average price will be quite static around, say, 20k. Let's say you had a number of orders around the 20k mark, but then let's say you had 10 orders. Those 10 orders may change the price if there's not much liquidity in them zones. But the moment you have a big order, let's say the 10x what the other orders are, it's going to affect the volume weighted average price. So where you're looking at the price at the minute is currently around the 19,895. Because of the amount of volumes that's been traded in the past, big orders and little orders combined, the actual weighted average of that price is closer to the 20,010. So what does this tell you? Well, right now we are below average, so that we're essentially below the average price. So what at least institutional traders will try and do is they will look for value before they either buy or sell. So right now we are in value for buyers as opposed to sellers because we are below the weighted average. And this is where traders tend to try to get back to. Now, obviously, over time, each time we're below this, the bigger the order, the faster this will move back down. So the average will always, it's not a static average, the static volume weight, it's never static. It's always going to be moving towards, where the price eventually resides. How quick it gets there all depends on volume. So the other thing I wanted to explain actually while I'm here is what actually moves price. Now it's difficult to look at right now because it's moving so fast, but between the bid and the ask, you're seeing this fluctuation of price. And if you look where this light grey line is, that's how many more buyers there are at this stage than sellers, right? Or you can just see it's a tiny amount here. Right now there's more buyers, but the moment either a market order comes in and executes more sell trades than buy trades, then it will move to the next zone of liquidity. Now, because BTC is a massively liquid market, there's going to be liquidity at every price. You can clearly see, even all the way up here and all the way down here, we don't have any gaps in liquidity. So that's why the price moves in smaller increments. Now, if you didn't have any liquidity at any of these zones, let's say all of this was blank, as in we had no limit orders between where the price is now, and then a buyer came in. Well, the price would go from here right the way up to where the next level of liquidity is, simply because there's no liquidity here. So the price is always looking for where liquidity is. Now, as I say, BTC is a very liquid market, which means the price is always fluctuating, up and down. But the thing that affects price is purely liquidity. If there's more liquidity to the sell side than the buy side, once that liquidity runs out, it moves to the next line down or next price up, whatever that may be. So I think it's a thing not a lot of people understands about how price actually moves, but when you think about it in a very simple and logical way, it's purely, is there more buy orders than sell orders at this one point? And if them orders get filled and there's no more liquidity at that level, it will move to the next price. So based on our current conviction, we know we've been filled as 19,950. So this is where we got filled. Obviously, we are to the short side. Now, I'm looking at where are my zones of liquidity to the above here, just in terms of how we would potentially manage. Now, looking at if we got filled here, we've got plenty of liquidity above us, which is good. Sometimes that can put buyers off in a thing, in a momentum reversal, because right now, if you look at this area right along here, actually, these are unfulfilled liquidity orders. This is where limit orders on the sell side have been in, obviously not being filled, and that gives maybe a reason why if there's not enough buy pressure, that it may start to revert further to the downside. So just a thing to keep in mind. So let's just zoom out a little bit, look at the heat map. Let me just go and plug my laptop up real quick because I don't want to lose power. These programs are very processor heavy, and if you're trying to do this on a laptop that's from 1982 without a power adapter, well, you're gonna land on the deck pretty quick. So sorry, right. So yeah, looking at liquidity, obviously this is the zone right now where we're at. Lots of liquidity to the, locally where we are around the price. We still have some big zones of liquidity up here. I mean, we've got 825 Bitcoin, around the 20,500. I looked at my stop, right, and I thought, well, okay, my original stop was here, which is about a 30% stop. 30% of my total portfolio. Yeah, given that we had this $500 challenge. But I think looking at where the zones of liquidity are, so we've got around the 20,200 and then another big liquidity zone around the 20,300. So rather than going at the 200 mark, I think I'm upping it basically to 20,350. That gives us a bit of breathing space. But I will monitor it, obviously, because I don't want to get stopped out. I don't want this to be a losing trade. I am mindful of the fact that anything can happen, but I'm just utilizing what I can see in terms of bookmap, where the zones of liquidity are, and I'm using this as a way to think about where my stop wants to go. Realistically, you could argue that, well, actually, you look at the 20,500 mark, that would be another big area to potentially look into. And that might be something I do, the 20,500, just to kind of give me that breathing space. I'm just thinking about it at the moment. I don't know. Anyway, we don't want to talk too much about that side. It's we're in profit at the minute. Great. Not much, but we're looking for further downside. So let me just go back over to the trading chart and trading view. So reason to be optimistic. Well, let's look at the DXY. What a way to lose subscribers. This is absolutely atrocious, the speed of my PC. I do apologise. I am getting myself a proper rig out. And this will be a lot better. You're still going to get my demeanour. I can't really make any changes about that. I'm never going to be fancy pants YouTuber with glorious lighting and all that nonsense. I'm just about raw data, getting into the action quickly and seeing where we are. So, right, DXY, we want this to go up, yeah, because this is inversely correlated to Bitcoin. I spotted this earlier on. We were about round about this area here, and I thought, well, okay, we were up here before we got filled, and it looked like it had a bit more movement to the downside. Right now, we fell onto this area of previous congestion. This needed to correct. It was going crazy. It needed to correct. So what we're seeing now is possibly a correction. The reasons to be optimistic is we've hit this MFI. We've talked about what the MFI is before, so we're expecting some momentum to the upside for sure. Any momentum to the upside on the DXY, which is obviously the strength of the dollar, correlates to a downwards movement on Bitcoin. So things are slightly in our favor. We've just got to manage it now. So what would that management look like in terms of how we're going to manage our potential take profit or stop loss? Well, I want us to get underneath the 800-day or 800 candle moving average. Right now, inversely correlated. We're approaching the top. This is on the hour. Similar story on the 4 hour actually. I think what I'll do is just close bookmap down because that will help. We're done with bookmap for the time being. It's really eating the processor power. Okay. Yeah, so 4 hour, similar story. We're approaching the over exhausted area. And the trade's looking pretty good. So I'm going to let this one run, if I'm honest, for a bit. 20% is my target. However, if it's got room to move, then I'm not phased by price. It's purely just looking at our indicators to see where we are. Where's the zones of liquidity? If we start to see big builds up of liquidity on the buy side, then that might be a reason to start thinking about reducing the trade. So, as I say, small account size. This is a challenge. In the past, I've traded with much larger sizes and stuff like that. But this is just a challenge I've set myself. I want to see if I can take $500 to $5,000. As we know, our first trade was a loss, but we had some good management in there. I think it was a 13% loss. So we went from something like $500 down to about 455. But it could have been worse. Honestly, it could have been worse. So that's the whole point. And in the past, I've probably traded that and left that open as it's just purely trading on liquidation rather than stop loss management. So this is a way to keep honest. I would probably start looking at stop loss management rather than take profit management if we break this ascending line here. So let's just see. Yeah, I think that's about it for this one. I think if there's any questions, anything you guys want to ask, just feel free to drop a comment in. I'm more than happy to pick up, and we'll catch you guys later.